Statutory revenue is the amount of revenue generated by the licensees under the Australian Financial Services Licence, AFSL, that is subject to the Australian Securities and Investments Commission, ASIC, regulatory requirements. The rise of the second largest AFSL licensee, the Australian Financial Services Licence, AFSL, is a regulatory framework that governs the financial services industry in Australia. The AFSL is administered by the Australian Securities and Investments Commission, ASIC, which is responsible for regulating the financial services industry to ensure that licensees comply with the relevant laws and regulations. The growth of the licensee in question has experienced significant growth in recent years, with its AFSL now standing at 512 firms. This makes it the second largest licensee behind Entereti, which has a larger number of firms under its AFSL. Key statistics: statutory revenue was $9 million, an increase of 54%. The licensee has experienced significant growth in recent years, with its AFSL now standing at 512 firms. The licensee is now the second largest licensee behind Entereti. The company also announced that it would be expanding its operations in the United States and Canada. The acquisition of new businesses: the company's acquisition strategy has been a key driver of its growth. In the half, it completed 6 acquisitions, 4 of which were equity partnerships. These partnerships allowed the company to expand its presence in new markets and increase its revenue streams. The company's focus on acquiring new businesses has enabled it to diversify its portfolio and reduce its dependence on a single market. Key acquisitions: plus equity partnership in a US-based company, plus equity partnership in a Canadian company, plus acquisition of a UK-based company, plus acquisition of a company in the Asia-Pacific region, plus acquisition of a company in the European region, plus acquisition of a company in the Latin American region. Expansion into new markets: the company's expansion into new markets is a significant development. It announced that it would be expanding its operations in the United States and Canada. This move is expected to increase the company's revenue and customer base. The company's expansion into new markets will also enable it to tap into new growth opportunities and increase its competitiveness. Key markets: plus United States, plus Canada, plus Asia-Pacific region, plus European region, plus Latin American region. Financial highlights: the company declared an interim dividend of $1.75 per share. This represents a significant increase in the company's dividend payout. The company's financial performance has been strong, with revenue growth and increased profitability. The firm is also looking to expand its services to include more specialized areas such as wealth management and retirement planning. Expanding services and revenue streams: increasing financial planning revenue. Count is taking a multifaceted approach to increase its financial planning revenue. The firm is focusing on 3 key areas: advice recruitment. Count is actively seeking to recruit experienced financial planners to join its team. This move aims to enhance the firm's expertise and provide clients with access to a wider range of financial planning services. Acquisition of financial planning fee parcels. Count is also exploring the acquisition of financial planning fee parcels from other firms. This strategy allows the firm to expand its client base and increase its revenue without having to invest heavily in new staff or infrastructure. Cross-selling to accounting clients. Count is looking to cross-sell its financial planning services to its existing accounting clients. This approach enables the firm to tap into its existing network and increase revenue from its core accounting business. #expanding services to specialized areas *** expanding services to specialized areas. Wealth management and retirement planning. Count is also planning to expand its services to include more specialized areas, such as wealth management and retirement planning. This move aims to provide clients with a more comprehensive range of financial planning services and increase the firm's competitiveness in the market. Wealth management. Count is planning to offer wealth management services to high-net-worth individuals and families. This service will provide clients with expert advice on investment management, tax planning, and estate planning. Empowering accountants and financial advisors became empowering accountants and financial advisors to navigate the future with confidence, to use more dynamic language and provide a clearer sense of purpose. Here is the rewritten article. The rise of advisory services. Count's growing role in the industry. The accounting and financial services industry is undergoing a significant transformation, driven by the increasing demand for advisory services.